Hi guys, good morning, good morning, good morning, good morning. If you're watching this, I would like you to just type in the comment section, introduce your name, and let me know where you're watching me from. You're welcome to today's commentary. This is Monday, 31st of March 2025, and it's the first commentary for this week, because the week is this is actually NFP week. We're anticipating NFP by Friday. Remember that NFP is usually first Friday of every new month is the non-farm payroll, and that's an amazing news event that it's going to pose a lot of volatility in the market. So if you're a newbie or beginner trader, we discourage the newbie trader from trading news events like the NFP, like the FOMC, like the CPI and the rest. Majorly this news event, we discourage the newbie trader from trading this type of event. Okay, so if you're on this live session, don't forget, I want you to engage in the comment section. Send in your most favorite emoji on the comment section. Let me know your name and where you're watching me from. We're gonna have an amazing time this afternoon going over the dollar index, the GBPJPY, and gold. And if you want me to analyze any asset for you, you can just do well to drop the asset you like me analyze in the comment section. Just let me know which asset you would want me to go over. Just do that in the comment section. Let me know the asset that you like me to go over for you. Yakubu, you're welcome. To drop the asset you like me analyze. Let's keep it coming. It's gonna be an amazing time. Okay, so let's take a look at the dollar index. Remember that from previous weeks, we've been anticipating the dollar to create some level of repricing into internal range inefficiency, just like we've seen happening on the daily time frame. We've seen the dollar taking out the sell side liquidity pool, residing below the relative equal lows right there, and the dollar has just traded into the the mitigation block right here. Price action trading above the bearish order block right there. You see that old high, and institutions are pairing up new long positions at the previous shots here. This was the last time we had a sell order that traded downwards. Institutions are pairing up new buy positions to rebalance the inefficiency inside. Also during the weekend, we had an analysis for what we call the seasonal tendency chart, and we're actually anticipating the dollar to create some level of bullish repricing into the internal range, and just after that we'll be looking to see the DXY create new expansions to the downside, to the sell side, into the lower drawn liquidity. So given that, I just want to show you guys a bit of what I'm talking about. So this is the seasonal tendency chart for the dollar index. Like you can see, the US dollar 35-year, the blue line signifies the 35-year price data. The red line there, it's signifying 15-year data, and the pink line signifies the 5-year data. So we've seen in the month of March, you've seen that in the month of March, we see across all the lines, we've seen the dollar create some level of shift of structure. You see that in the month of March, and creates a repricing into internal range, and it drops. On the 15-year data, we still see the dollar index create shift of structure around here and create some level of bullishness, bullish pricing before it trades lower. into the June contract, the same for the 5-year. So that means we would anticipate we should anticipate a bullish repricing on the dollar before the sell momentum comes into the market. And given also that the market structure supports our idea, you can see that after we took out the sell side liquidity pool there and we're finding support at that level, the dollar created shift of market structure bullish right here on daily time frame. And right now we're reacting off the bullish breaker because we took out the low before the shift of structure. Price is reacting off that level, and we want to see this guy trade into the higher time frame drawn liquidity, the drawn liquidity above the equal high here, the inefficiency above that needs to be rebalanced, all of this one-sided price delivery, the liquidity void. We want to see price trade into that level. This is what is creating our basics for anticipating a bullish dollar. And you know, in my last commentary I outlined something on the 1 hour time frame. Remember, I said that we've seen the dollar taking out that low, but there's a bullish order block. But again, I mentioned that if we have a shift of market structure during the new week, all right, that is after trading into this bullish order block, if price now closes above this previous lower high, that is a bullish market structure. We're going to be buying. Then another school of thought was that we want to see this guy trade into this drawn liquidity, take out all of this and trade into that drawn liquidity, take out the sell side liquidity there. When you take out the candle wicks, it's going to be more clear to you. You're going to see price as it is. You're going to study the narrative of price action without the candle wicks, so you can see that price actually took out the sell side liquidity pool residing below that low and traded into that tiny bullish breaker. Why is it a breaker? Because we've seen it here create a lower low before shift of structure, left that low untraded too, took out that low, and we sat on the breaker right there. It's not coincidence. The precision there is saying something. It is institutional market structure. All right, so right now what do we see? We see the 1 hour time frame confirm that we're about to start buying the dollar, of course, because we've created a bullish shift of structure, mitigation block, or rather, let's see this. Okay, I think this guy took out that low, so took out the low shift of structure. I have that as the bullish breaker. Also, it's a bullish order block. I want to see the dollar trade into that level, and it's going to be a buy, you know, buy confirmation for me into, it's going to be buy confirmation into the drawn liquidity, just the one we have outlined on the daily time frame, and also rebalance the inefficiency on the internal range. So we want to see the dollar trade above the relative equal highs, the old highs there, the diagonal liquidity, also all of the inefficiencies that we've outlined on the daily. We want to see this happen. So while this is happening, earlier today I think we even took a trade on the Euro USD. We took a shot on Euro USD on the one-on-one mentorship community. I dropped a signal to actually I dropped a signal to sell the Euro USD, and quite a lot of us actually leverage on it. Some of us have made small money on it, while some of us are still going to be on the trade because we're looking to see price trade into the drawn liquidity right below. Okay, so let me show you guys. So look at the signal we dropped today, sell Euro USD. The narrative was because we've seen the dollar creating something interesting, and now we can sell the Euro USD. And we did that. After a while, we still gave an update. This is what to do. This is how to manage the setup. And of course, my guys never miss out on some of these trade opportunities. So if you're looking to be one of these, my inner cycle of traders trading with me, and you have the advantage of a closed mentorship, closed access, I'm going to give you close attention. We're going to give you an accountability system. That means we may even sign up into your trading account to ensure that you're doing what you should do, to ensure that you develop the trading discipline. Most traders lose money because they don't have the discipline to follow the standard risk management plan. If you take a trade and the trade is in profit, there's something you should do at every step of the way while the trade is moving. It's called trade management. So you're going to learn some of these things, and more importantly, you're going to have access into my profitable trading models. Those ones are not everywhere. You're going to have access to those trading models, and just that way you will be able to make money together with the entire team. So if that's what you're looking for, just check the link on the description of this live session. Send a DM. You're going to see one-on-one mentorship. Send a DM, and my personal assistant is going to attend to you and sign you up on the program, and it will change your life. So this is GBPJPY, and I've seen something very powerful, very amazing actually. Let's go back to the daily time frame. You know why we always want to see the daily time frame or the higher time frame is because the higher time frame is the main driver of liquidity. That's where the real institutional liquidity is residing. So during the previous week, we've seen the GBPJPY create a bearish structure right here and left that high, the buy side liquidity pool, with a fair value gap above, also with a bearish order block, and traded into price traded into that level. Remember, we called the GBPJPY buy previous week, and we traded into the drawn liquidity right there and started to sell. We are selling the GBPJPY on the 1 hour time frame. However, let's take a look at how that happened. The 1 hour time frame created shift of structure bearish, rebalance that inefficiency by the left. You see that fair value gap by the left, price traded into that level, we sold, also because there's a bearish order block there. So confluence of the other bearish order block, the fair value that was inverted, we sold there, and price delivered, took out that sell side liquidity pool. So this week we're going to sell more, but we don't want to sell a discount market, we want to sell a premium market. That means we need to wait to see price action trade into the premium level of just this range that was created, then we look to sell more. All right, so while we're doing that, we have two setups in mind. The first setup is if see price consolidated. For me, this is a potential power of 3 concept that will unfold just for a day or two. Price has consolidated. We need to see price manipulate retail into that order block right below there. You see that there's a sell side liquidity pool there, but also there's a fair value gap below. That is a powerful model. We want to see price trade into that level. Then we'll buy the GBPJPY into the opposing setup. Price took out the high, shift of structure, that old high. We'd like to see price trade into that level again. There's a fair value gap right there, and we're going to employ any of our entry patterns right at that level to sell again into the lower time frame drawn liquidity. This is my expectation for the GBPJPY. Then we should be looking at gold as the last stuff to look at. Gold has been massively bullish. I'm sure you guys by now you know that gold is bullish. Gold has been buying, so the only reasonable thing to do is to look to buy gold the more. Just look for any retracement into a discount area. We're going to buy gold because gold is actually bullish, even though this looks to me like gold would want to rebalance a bit of this bullish pricing, just maybe into the fair value gap here. All right, if it doesn't happen this week, there's no problem. Let's take a look at the daily. The daily time frame is crazily bullish. Everything is bullish on gold, so you should look to buy gold. That's my only advice for you. Look to what? Buy gold. Okay, so for me, I'm going to be looking to buy gold at the bullish order block on the 1 hour time frame right there. We want to see gold reprice into that level, that area, and it's going to be a good trade for us to buy gold again into the drawn liquidity. Above, gold to the moon, gold to the moon. Okay, my friends, I'm sure that this things I have showed you guys, of course, are going to be educating. So I'm looking at the comment section right now just to see if you guys have 1 or 2 things you would like me to go over. Then I will be able to do that for you. All right, I took a trade just earlier this morning on synthetic indices, and I just checked the trade right now. It's crazily in profit, and just as usual, we are flipping with I just flipped $17 to about 360 US dollars. I'm not just saying stuff I'm not doing. I'm doing it, and I'm showing you guys that these things are possible. See the trade? I took this trade just a few minutes ago, this 5 minutes time frame, and this guy has sold. Look at the outcome, 17 USD. to about 360, and I think this is a good time for me to close, and I'm closing $382 in profit. That's a good performance for today. That is a good performance on in synthetic indices. So one of the things you're going to learn also is you're going to be learning how to trade the indices using, just take a look, we closed $395. It's not magic, it's simply knowing your craft, knowing when to buy, where to buy, or when to sell, where to sell, when to exit, and how to manage risks properly. You don't need to risk so much to make so much. All right, you only need to know how to manage risks, sometimes even avert risks, sometimes just sit and do nothing, because better a missed trade than a losing trade. I'm looking at the comment sections. If you have something you would like me to do for you, especially an analysis you'd like us to go over in the next few minutes, I don't have so much time here, but I'll be able to go through for you guys, then let's do that. If you don't, we can just call it a day, and I'm going to wish you guys an amazing trading day. All right, somebody is asking me to analyze the GBP. No, let me see. Nasdaq. Okay, we're going to do Nasdaq. We're going to do AUDUSD. We're not going to analyze AUDUSD because we've just done for the dollar index. And if the dollar, you already know that the dollar is the benchmark asset for all the dollar and dollar associated currency. So by that it means if the dollar is not ready, nothing is ready. We want to see the dollar trade back into the bullish breaker right there. Once the dollar gets into that level, I'll be confident to take a buy. Of course, you've seen the dollar accumulating drawn liquidity here. We're going to be buying into the drawn liquidity above. Once it gets to that level, that's a buy for the dollar. And if the dollar is bullish, we should be selling the AUDUSD. AUDUSD is a foreign currency. It's paired negatively against the dollar. If the dollar is bullish, AUDUSD is bearish. That means you are selling the Australian dollar while you are buying the dollar. That's what it literally means. If the dollar is bearish, that means if the dollar is bullish, that means you are buying the dollar and selling the Australian dollar, because that's how they are paired up. They are paired up negative. Okay, so we would also be looking to see the AUD trade into any of this inefficiency, the fair value gap here. As the dollar approaches the breakout mitigation, I want to see this guy approach that level, that area. Then I'm going to go short on AUD. It's already bearish. Go short on AUD while we go long on the dollar. Then my friend who is asking me to go over the Nasdaq, let's see if we can go over Nasdaq. NAS 100 forex.com. Okay, so let's check the higher time frame. Remember, so Nasdaq is actually bearish just looking at the daily time frame, but let's look at the weekly. Bearish, everything is bearish. Monthly, bearish. It's crazy, everything is bearish. And I think I did this analysis some weeks ago, where I mentioned we want to see this guy take out this diagonal liquidity, these relative lows, also because there's an inefficiency below that. We want to see it trade below those levels. On the daily, price just traded into the bearish order block there. The buy candles that were traded through by consecutive sells. You see that if you measure between the swing high to the swing low, that's premium. That is a sell, so we are selling. On 1 hour, look for market structure to sell. Okay, look for market structure to sell. So I'm going to be selling Nasdaq, but where am I going to sell Nasdaq? I want to wait until Nasdaq reprices into internal range, because for every external range liquidity taken, price will do what? Retrace into internal range, then we sell. Okay, that's my perspective on the Nasdaq. Then someone asked me to look at step 200. Let me see step 200. Exactly. Do you see the setup I took? This was the setup I took on volatility 50 index, and it delivered. I wanted to be stingy with this first setup, but the first trade I took actually took me out. But because I was confident in the setup, I still took another entry, and we're good. Any retracement again, I'm going to short more, because now I have more equity to go in. That's why I took the first profit, so that you can compound equity and take bigger risks. Step 200. Okay, step. So you start with the higher time frame. Higher time frame looks bullish on the trading view, although I'd like you guys to also look at the weekly and the monthly on your MT5 trading account. That's going to give you more insight. All right, so given what I'm seeing here, price actually took out liquidity, created shifted structure higher. Now we've taken out liquidity below that level. I really want to see this guy trade into that bullish order block, so I'm still bearish. The bullish order block there, I want to see it trade into that level. All this relative equal lows, price traded into fair value here. Also, do you see previous area of demand? Bullish order block that's violated, price traded back into that level to pair up the long orders there with short orders here. We want to short into that area. On the 1 hour time frame, you're looking for structure. All right, so if I was going to sell this guy, I would have sold, price created shift to structure, my entry will have been at that high. Okay, will have been at the high there, that will have been my entry, and I'm going to short into the drawn liquidity lower. So for now, every retracement higher, I'm going to look to sell step 200. So at the moment, what should you be looking for? Look to see price take out that hold high and trade into the bearish order block there. That's where to sell step 200. That is my view on step 200. Okay, I believe you understand exactly what I'm showing you guys. So my friends, yeah, I remember a lot of you guys who are asking us for recommendations, broker recommendations. Please check the link on the description of the video. You guys have to be trading with our recommended broker. I want us to grow together. Sign up with that broker and fund at least 500 USD. Once you can fund 500 USD in your trading account, then just reach out to me and let me know that you funded your account with 500 USD. Just maybe I think we can give you access to an accountability check. It's not mentorship. We're not promising mentorship, but we will give you an accountability check that keeps you in tandem with the risk management strategy, so that we ensure you're making money as well. All right, make sure you do that. Check the link on the description of the video. Fund at least 500 USD. Reach out to me. Let me know you funded 500 USD and you want to be under our accountability check, our system of ensuring that you do the things that you should do and you're going to be accountable to what we ask you to do. Then you should leverage on that. Okay, don't forget, subscribe to my YouTube handle, like the video, drop a comment, let me know what you feel about today's analysis. Let me know how you're feeling. What exactly are you feeling? What is your current experience in trading? Just let me know, and until next time, I wish you good luck, good trading, stay safe.